Wednesday the 17th, 30 minutes to the European close. This is what we're looking at. Stock 600 higher. We're at 490. We've taken out that key level. Mining stocks, auto stocks, leading the charge. It's an interesting day. We're going to talk much more about it. As I say, 30 minutes to the close. We're going to count you down. This is Bloomberg.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
So just under 30 minutes to go until the European equity market close. We're going to count you down into that close. This is the picture we're seeing right now. Underperformance coming through from the London market, but the pound is on the front foot as a result of the inflation data we've seen out of the UK today. We'll talk much more about that in just a moment. On the continent, it's much more of a flatter session, but remember that we've been accelerating over the last few days. Last week into this week, very positive. Maybe some just digestion happening here for European equities. As I say, the CAC 40 is up by 0.1%. The DAX is up by 0.1%. London is definitely the laggard. But as I say as well, Alex, miners on the front foot today.
Yeah, here in the U.S., it's sort of the fundamentals versus the exuberance. That's how I'm looking at it. The consumer discretionary, really the only sector up in the S&P, up by 1%, really helped by TJX, now up by 8%. Super solid numbers coming in, particularly that home goods segment. Overall, though, the market's a little bit mushy. The Dow is the biggest loser. Goldman Sachs weighing down by about 2 percentage points on the Dow. Target also trading heavy. Numbers solid. Sales okay. It was the margin story again, very similar to what we saw to Walmart. So that's kind of the fundamental read on where we are in the market. And then the exuberance comes with Lucid. Yeah, okay, stock is down by 3%, but had a very strong run pre-market, very strong run the last couple of days, and now at one point was worth more than GM, worth more than Ford, $91 billion. That's where that speculative money is going. It was a favorite today, Guy, on stock twits. So clearly the retail investors are there. The boards are moving the market. Fundamental, exuberance.
It's amazing, isn't it, to watch what is happening here. And plenty of people are getting worried about what is happening. But are we 97? Are we 98? Are we 99? Certainly doesn't feel like 2000 just yet. But the build up to it, just maybe. Talking of things that are inflating, UK inflation climbing faster than expected. In fact, it's risen today in terms of the data we've seen to the highest level in a decade. That, of course, increases pressure on the Bank of England to hike interest rates. Maybe they bottled it last time around. Maybe December they won't have a choice. Lizzie Burden, Bloomberg UK economy reporter, joining us now. What is driving this inflation?
Well, you had a higher than expected contribution from restaurants and hotels, but mainly it comes back to energy. There were rising costs from wholesale, and that translated into higher natural gas and electricity prices. And remember, the regulator, Ofgem, allowed suppliers to hike tariffs to offset those rising wholesale costs, and you'll get another rise in April at the same time as a planned tax rise. So if the Bank of England doesn't step in soon, then this squeeze on household finances could choke off or at least undermine the recovery.
Well, Lizzie, what can the BOE, though, do about that? They can't actually create more natural gas, and they certainly can't change government policy in terms of the payroll tax.
No, and they can't help the shortage of truck drivers, as the Governor Andrew Bailey has pointed out. But they could ease the pressure on UK consumers heading into the winter. But at the same time, if they hike interest rates, then you'll get an effect on house prices. And so it's an interesting question to ask whether people will be asking for pay rises and whether that will feed back into the inflation. At the moment, from survey data, you're seeing it in starting salaries, but not pay bumps for existing staff.
How many of the boxes are now ticked for the Bank of England to hike? We saw the furlough scheme details yesterday in terms of the employment numbers we got. That struck me as being kind of box ticked. We're moving on. I know we're going to get some more data before the next decision. Now we've got this inflation data coming through as well. What else could we need to see for the Bank of England to be convinced, the MPC to be convinced to hike rates.
Well, that's exactly what markets will be asking. What more could you need?
Yep.
And there is such an emphasis on the labour market from the Governor, Andrew Bailey, especially this week. He said it's the missing puzzle, the missing piece in the puzzle. You've had that strong labour market data yesterday. You've got more jobs data just before, on the eve of the decision. We'll get retail sales on Friday. So we could see what's happening to consumer spending. But it's difficult to see what else when the case is already so strong.
What are money markets pricing in at this point? Yesterday was 100 basis points by the end of 2022 in terms of hikes. What do they have right now?
It's about that, and economists, interestingly, are on board with markets. Before the November interest rate decision, there was a split between markets and economists, but economists are on board this time. They're seeing this rise to 0.25% in December as well.
All right, Lizzie, thanks a lot. Really appreciate the breakdown. Really interesting numbers coming out there. Bloomberg's Lizzie Burden joining us there. And just to recap that, so inflation's super high, but what's interesting is that a third of the things that UK consumers actually buy is now running at 5% or more a year. Olive oil, cigars, movie tickets, 30% of a shopping basket if you go to the store. All of that growing over 5%. Guy, what are you going to do?
These are the important things in my life. So what was
Olive
that
oil
list?
and cigars.
Sounds like a heck of a weekend. With a movie theatre thrown in as well. The real question as well is, do we find ourselves in a situation where actually there is a danger that the UK economy starts slowing? It is obviously fighting off all of these pressures and having to deal with that. And you wonder whether or not actually the Bank of England is trying to actually ask itself a question about slowing growth as much as inflation at the moment. Now, clearly the mandate is on inflation, but it's got to watch the growth story very carefully. Neville Hill, Credit Suisse Chief European Economist, joining me now on set. Where do you see the debate at the moment? We have clearly an inflation problem here in the UK that is growing. The data support that, and we're likely to get more of it. But there's also a growth concern as well that is increasingly being talked about at the moment.
I think they're married in a way. I think that's part of the problem that the Bank of England are facing, which is that, unlike other economies, the UK has had a really serious supply shock in the past year as a consequence of Brexit taking place at the same time as the pandemic. And I think that has meant that the trade-off between GDP or unemployment and inflation in the UK has really deteriorated. So in some sense, I think the issue the Bank of England are grappling with here is that the level of unemployment that we end up with after the furlough scheme has settled down might be too low for the economy to cope with keeping inflation at a 2% target. So in some sense, and the Bank of England probably wouldn't want to articulate it like this, the solution to high inflation might be slower growth, which looks as if we're going to get in the UK.
Well, we could probably get that without a rate hike. So rate hike, yes or no? How much?
Well, we're looking for a 15 basis point hike in December, and we're looking for rates to get up to 0.75% by the end of next year. So probably not as aggressive as the market is expecting, but probably enough to take some of the steam out of the economy, and in particular, I guess, some of the more interest rate sensitive parts of it, such as housing.
Neville, stay right there. We need to carry on the conversation. Neville Hill of Credit Suisse is going to be sticking with us. We're going to be talking about what the risks are when it comes to the euro area's financial stability. Warnings about housing markets overheating, warning about financial markets as well within today's stability report. We'll focus on that next. This is Bloomberg.
Inflation is going to be transitory. Inflation, will slow down quite clearly. Perhaps the question is the intensity and how rapid, this climb is going to take place. And this is going to be related to the evolution of the bottlenecks, to the evolution of the cost of energy, and how persistent this is going to be.
ECB Vice President Luis de Guindos talking about inflation a little bit earlier on. Still with us, Neville Hill, Credit Suisse Chief European Economist. How different do the inflation pictures look like here in the UK, in the United States, which seem a little bit more comparable at the moment versus what is happening within the Eurozone?
Yeah, I think the Eurozone's looking pretty resilient at the moment. The inflation has gone up. Part of that's base effects. But you can looking at it, you can really decompose what's driven inflation up by a lot of these transitory factors that should abate over time. So I think, the risks to inflation in the Eurozone are just far less considerable. One other really important difference between, I think, the Euro area and the US and the UK is that the labour market just doesn't seem to be anything like as tight. I think part of that is that the furlough scheme's done a very, very, very good job of keeping workers attached to their jobs. So you're not getting the kind of mismatch that perhaps you're getting in the US at the moment. But also, unemployment's 7.5% compared to 4.5% in the US or UK. So there does seem to be a lot more slack. So those wage pressures that we're starting to see emerge in the UK and in the US just don't seem to be a clear and present danger for the ECB.
Neville, I have a hard time understanding if that is a good or bad thing. So the way you just phrased it seemed like a good thing. But then I can read other economist notes that talk about how the fact that we did have so many people on unemployment actually led companies that survived to be much more productive, and that we're going to get into some kind of CapEx cycle because of it, and we're not going to see that to the same extent over in Europe. What's the upside?
I guess the upside is that the economy does have more room to grow in terms of delivering lower unemployment over several years. So I think euro area unemployment could easily fall another percentage point or two below where it was before the pandemic, which was just above 7%. So as far as the ECB is concerned, it's got room for the central bank to keep its foot firmly on the accelerator. And I think this time round we've also got the capacity for fiscal policy to do more to support demand and the recovery over time. So I think it's a high quality problem. It is a problem. You'd rather unemployment was lower and as low as it needs to be. And that's been the challenge the ECB was grappling with before the pandemic. And I think it's going to have to continue to deal with that in the years to come.
What are you anticipating on the fiscal front? The Greek Prime Minister was here yesterday. He was pretty confident that the Growth and Stability Pact would be significantly altered. It will have to be if Greece is going to, in any way, get close to the targets that may or may not be set. What are you anticipating there? Do you think the fiscal impulse will continue in Europe next year, or do you think the hawks may ultimately step in and make it harder, particularly for some of those peripheral countries?
I think the rules will be eased in a way that they're not as restrictive as they were in the past decade. And I think Europe's done a very good job of learning from its mistakes that it made in the 2010s in terms of excessively tight fiscal policy and not managing recessions well. So I think we won't have that pressure on governments to reduce debt quickly. We won't have the pressure on governments to consolidate their public finances, get the deficit back below 3% in as much of a hurry, which will allow for, I guess, a less restrictive fiscal policy stance. The other big missing part of the jigsaw here is the scope for, I guess, federal fiscal policy to take some of the weight this time round. And, at the moment we've got the recovery fund starting to disperse money. That's going to really start having a positive impact on euro area growth next year. And the big question for me is, once we've got a new German government in place, once we've got the French elections out of the way next year, is there room, scope for France, Germany and Italy to turn the recovery fund from a temporary problem or a temporary fix into a more permanent fiscal policy for Europe that will ultimately allow for a federal fiscal response in future that would really help underpin economic growth.
Is Germany really on board with that? I mean, you talk about how there's much more fiscal flexibility and not sort of that budget cap. Is Germany really going to go that way?
I think the prospective coalition in Germany certainly seems to be much more inclined in that direction. Both the SPD and the Greens are keen to make the recovery fund a permanent fiscal mechanism, and both parties clearly have some ambition in terms of boosting German public investment, particularly in green direction. It's true their other coalition partner, the FDP, are less enthusiastic about both of those. And it strikes me, in terms of the agreement we've seen so far, that the FDP are probably more keen on fiscal restriction and orthodoxy at home than they are opposing a European fiscal development. So it may well be that the national fiscal rules still remain fairly strict in the long term. You've got to have a deficit below 3% of GDP, but there is scope for, as I say, a federal fiscal authority over time to take some of the burden of fiscal stimulus away from national governments to, I guess, a pan-euro area facility.
We spent a lot of the last hour talking about Volkswagen versus Rivian, the fact that you've got these stocks that are taking off in the United States, that people are concerned that we're heading for a kind of 2000-style bubble and then a burst. We had the financial stability report out today. We've got an idea of kind of how the authorities in the Eurozone see risk at the moment. It feels like we're on different pages. There are bubbles, there's housing market issues, and obviously the financial markets are enthralled to the central bank. But it doesn't feel like it's in any way the same sort of explosion in risk-taking that we've seen on the other side of the Atlantic.
No, I think that's right. And I think the ECB, I mean, in a financial stability review, you've always got to sound worried about exuberance somewhere in the economy. And they flagged up, credit markets, they flagged up real estate. But actually, what was really notable for me in the financial stability review was, what wasn't in it in terms of what they were worried about. And actually, a lot of the sort of details in the document about the performance of bank assets and in particular non-performing loans, it's really striking that, if you turn the clock back 12 or 18 months, that's exactly what we'd be worried about coming out of the pandemic. And instead, the quality of bank assets, the quality of loans, the quality of corporate and household balance sheets is remarkably good. And I think that really does help underpin a solid recovery, because you don't have the kind of economic scarring either in the real economy or the financial system that, as we saw a decade ago, really impeded the pace of economic recovery. So I think that's encouraging.
Neville, it really feels like you're quite positive on the European economy, especially, say, versus the U.S. I mean, is that a fair statement to make? And I say that with surprise, because we're still weighing like $2 trillion bill in the U.S. and we talk about some serious stimulus, and we just keep getting inflows, particularly from retail investors that's just propping up stocks.
I think the prospects for Europe certainly look good relative to how they've looked, coming out of past recessions, and particularly, in 2010, but also actually, in the aftermath of the dot-com crash. So I think, the economic infrastructure and I think, the policy response that we had during the recession really do help underwrite a much better and more vigorous recovery over the next few years than we've been used to. And I think that will surprise investors. I also think, another sort of relatively optimistic glimpse at Europe at the moment is the fact that if we are talking about imposing things like higher carbon prices, shifting towards a green transition, the European economy is relatively well positioned for that. I wouldn't say it's brilliantly positioned, but it already has high carbon taxes. It already has a fairly low carbon intensity of production. So there are sort of, I guess, glimmers of optimism that you might be able to pick out of Europe that, if you were looking at the Eurozone, 5 or 10 years ago, you'd be very hard pressed to find.
No, fair enough. Right, Neville, thanks a lot. Neville Hill, Credit Suisse Chief European Economist. Thank you very much for joining us here. All right, coming up, Visa is not everywhere that you want to be in the UK anyway. Amazon says beginning next year it won't accept Visa credit cards issued in the UK. Visa is down by about 75 points here in the US, really weighing on the Dow. We'll break down what this all means. This is Bloomberg.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Ritika Gupta. UBS Chairman Axel Weber has issued one of his strongest warnings yet on cryptocurrencies. Weber spoke at the Bloomberg New Economy Forum in Singapore. He said he is skeptical of digital currencies and that the concept of anonymous payments won't last. Weber is a former central banker who has been bearish on crypto for years. And Amazon is making another attempt to push back against fees charged by payment networks. Starting next year, the world's largest online retailer will no longer accept purchases made with Visa cards issued in the UK. Amazon says card fees are an obstacle for businesses trying to get the best prices for customers. Visa says it's disappointed and is trying to resolve the problem. And that is your latest business flash. Guy.
Ritika, thank you very much indeed. Just to be clear, it's Visa credit cards that we seem to have an issue with. Well, no, it's the debit cards are fine. So credit cards problem, debit cards are fine. I'm just kind of clarifying what is happening here. But Alex, this feels like a warm-up. This feels like a warm-up to a much bigger fight. So I'm wondering where this is going, because they've been having issues with Visa in Singapore, Australia. Now we're into the UK. What's next? Charlie Wells is here from Bloomberg News to help us kind of break this all down. What do I make of this? What is going on here? This feels like a kind of preliminary skirmish, part of the preliminary skirmish between these two companies.
Guy, you are right. So this is sort of corporate brinkmanship. This is two of the biggest players in e-commerce literally looking at themselves in the eye and saying, I dare you. And today, Amazon did, right? They are betting that their customers here in the UK will stick with them, even if they are told that at that purchase point, they need to change cards. That's a bet, but that's a bet they were willing to make.
So then, in terms of Visa, what happens next? Because this is really only like, what, 2.6% of their total. So in and of itself, it's something that Visa can very well manage. How does this sort of snowball?
Yeah, Alex, that's a really good point. And look, we're seeing Visa shares down now to the lowest level since February. Of course, this is a very UK story, as Guy was saying. You know, the day is young. What we do know is that Visa had been planning on a major change to its interchange rate in the United States, where, of course, it is also an incredibly popular card. That was supposed to come into effect in 2020, but it was postponed until April of 2022. So we could potentially looking at a much bigger battle looming in the months ahead.
So this is a warning shot.
I would say it's a
because they use MasterCard over here for their Amazon use MasterCard for their cards, but they use Visa in the States. So this is a warning shot.
This is a warning shot, and Amazon has been trying for a really long time to cut out some of these card issuers, right? We've seen them try to have people link up their bank accounts to make payments. They've tried to push debit cards, which are of course cheaper, but I'm not sure if this is going to work.
Is there anyone else, any other company, like credit card company, debit card company that is on the chopping block for this, or is this a Visa, Amazon specific UK thing?
This is really interesting because, I mean, usually here in the UK, when you are making a purchase, say on a travel website or some, you know, sort of smaller company websites, you see it's actually Amex that the company doesn't accept. And so this is really interesting, and it sort of reflects a change in the card market in that some of these larger issuers, the Visas in particular, are rolling out these premium cards, and they're expensive, right? Someone's got to pay, and what we're seeing is it's retailers.
It's a massive issue when you've got an Amex corporate credit card. Trying to use it in Europe,
good luck.
Precisely. Good luck. It's a huge problem, Alex. You go anywhere, and they're just like, no, we'll take the Visa. We're not going to take the Amex. Obviously, a different situation over in the States. Charlie, great story. Thank you very much indeed, Charlie Wells. But it's going to be interesting. Maybe next year things start to change. European equity markets are about to close. We're about, 4 minutes away till the end of the day here in Europe. These are the numbers. The FTSE 100 certainly being dragged down. The miners are actually on the front foot, but there's a pound factor in all of this. The inflation number we were talking about a little bit earlier on means that the pound is up. There's a kind of translation effect that you see that therefore hits the FTSE 100. DAX and CAC, they're not doing anything. They're absolutely flat. We're going to talk more about that next. The close is coming up. This is Bloomberg. So we're counting you down into the close here in Europe. The end of regular trading about to happen. We're kind of falling into the close as well. We're certainly softening up in the London market. You're seeing it elsewhere. The CAC and the DAX over the last couple of minutes certainly softening up. So we're near session lows. Volume's pretty much average, so there's nothing really to take away from that. The FTSE 100 certainly suffering more than most. There's a pound factor. So you had a strengthening of the pound today versus the euro on the back of the inflation data we saw a little bit earlier on. The speculation, of course, is that the Bank of England, given the data we've seen over the last couple of days, are going to pull the trigger maybe a little bit earlier. And as a result, the pound strengthens on the back of that, not against the dollar, but against the euro. On the continent, the DAX is flat. The CAC Eurant is absolutely flat as well. Feels like we're just kind of pausing a little bit, a bit of digestion after the recent rally that we've seen in European equities. This is how the session has developed. As I say, a little bit of a fade into the close here in Europe. Not much of one. We're just coming off, as you can see. But nevertheless, we are at 490 on the stock 600. We're up by less than sort of 1.2%, but they are gains, and we continue to make those gains. So we're pushing through the 490 level here in Europe. Feels like we're going sideways right now, but kind of that's been the story over the last few days. Kind of you've seen this kind of pickup. It's been very incremental, but it's happened day by day. In terms of the message that we're managing from a sector point of view, the miners have definitely been on the front foot today. Technology, the car sector has been picking up as well. We're going to talk much more about the car sector in just a moment. Where's the weakness? Travel and leisure. It's actually the leisure rather than the travel that is causing the concern there. Real estate coming down as well. We're starting to see some of the UK-listed property companies reporting numbers. Generally, the picture actually is that companies are taking out huge amounts of space in London. They've got to bring people back into the office and they've got to separate them. That is actually causing something of a pickup, not reflected in the numbers today. So let's talk about some of the individual names and figure out what is happening here. Evolution is a gaming company. It has been accused, it's a slightly perplexing story. It's been accused by a rival's lawyer about the fact that it's been doing business in areas that are under US sanctions. I think people are struggling to kind of get to the bottom of actually what is happening here, but as ever, you kind of shoot first and ask questions later, and as a result of which Evolution is trading down. We talked about the Biogen story. There's pushback from European regulators in terms of its new Alzheimer's drug. That's rippling through into other areas, smaller biotech companies here in Europe that are in the same place. BioArctic's one of those. It's just softening up a little bit. But after all of the focus on Rivian over the last few days and the fact that it's now worth more than Volkswagen, today Volkswagen bounces. It's not up by much, but remember, it's a big stock. It's up by 0.6%, Alex.
All right, let's stay with autos for a second. So on the one hand, you have Volkswagen. Like you mentioned, it's up a little bit, but it was cut by Exane BNP Paribas after the close yesterday to underperform because the competition in the EV space is just really tough. Now, pair that with Rivian, for example. Sure, Rivian stock is down today, 14%. That's nothing to sneeze at here, but the valuation of this company is still $132 billion. You also have Lucid in the U.S. being worth more than GM and Ford. So what's going on here? Arndt Hellingworth, Bernstein and Global Automotive Research Head, joins us now. Arndt, when you look at these things, is it fundamental? Is it animal spirits? Is this 2000?
Look, it's not fundamental at the moment, but it's obviously the clear reflection that we're moving in a new era of automotive technology, that software and electric powertrains will become substantially more important. And in these areas, the startups have several advantages. Whether that justifies the valuation that you've just talked about is a completely different question. But the train has left the station. We're moving into connected digital electric mobility. The only point, and that's what we discuss here as well, is how will these traditional OEMs manage the transition and how relevant will they be in the future? Or will the entire market be taken up by the Rivians, the Teslas, the Lucids, the Japanese EVs? Because that's what current valuations suggest.
Are the current valuations wrong, Arndt?
I think they are wrong. I think they don't reflect the economic opportunity, because I do think that even if we discount huge mega growth, that these companies occupy the lion's share of car sales in the future, a reality is also that they will converge to fairly normal auto companies. And even if they can generate margins like a Porsche, right? And that's highly questionable. Even then, those valuations are too high.
So if I wanted to play the shift into EVs and not be saddled with like a legacy company that still has its traditional business that it's dealing with, how do I do that and manage the kind of volatility?
Well, you have various options, right? I mean, you can look at various suppliers. A company like Aptiv in the US has done phenomenally well. You can look at other parts of the value chain. You can think about battery makers. And look, if you don't want to be engaged with the legacy because you think it's such a bad thing to generate free cash flow with, hybrid vehicles, whether it's a Toyota or, even internal combustion engine vehicles, if you think about a BMW, if you don't want to do that, there's even cheaper electric vehicle exposure in China than, the Lucids or the Rivians right now.
Arndt, VW makes what, 10 million vehicles a year? Who's going to make 10 million? If it's not VW making 10 million vehicles a year, who's going to make 10 million vehicles a year?
I just really don't know. I think the future will be that, Toyota will make 10 million vehicles a year. Maybe one day Tesla will make 10 million vehicles a year because they have a global brand and they have the ambition to sell as many EVs as they can. And they're ramping in China, in Europe, in the US. It's just a very, very long journey because what people always forget is manufacturing an electric vehicle is as complex and complicated. It needs a lot of CapEx investment in tools, paint shop, robots. It's not that different from manufacturing an internal combustion engine vehicle. Despite all the stuff that's being made up out there, it's still, pressing a lot of steel into a chassis and assembling everything, painting everything, making sure the quality is automotive grade. So if you walk through an EV plant, it looks, feels, smells very similar to a combustion engine plant.
Well, that's really interesting because what I was going to ask you is the struggle with these traditional automakers reminds me very much of what's happening with energy companies. And Dan Loeb is pushing for Shell to sort of to break up, right? Spin off its sort of alternative business and then leave its traditional oil business over there. Are we seeing any calls for that for the traditional automakers?
Yes, well, we are having these type of discussions with traditional OEMs. At what point does it make sense to move your legacy business, your cash cow, into a separate business and free up the valuation for your future mobility asset? It's an increasing discussion, and it's obvious, right? If you look at these valuations out there, there is an opportunity, and car makers have started outsourcing engine portfolios to suppliers, outsourcing engine portfolios into joint venture. So I think that's a journey, and it's a discussion that the shareholders will lead with all car makers in the coming years.
Did Herbert Diess overplay his hand when he started to act like Elon Musk earlier on this year?
I think VW and Herbert Diess were very aggressive in pitching the whole narrative of we will be the largest EV maker. We will be, we'll turn ourselves into a software company. The narrative is correct in terms of a wake-up call for the company. I think that really helped them to transition fast and to commit, especially after the diesel crisis. I think VW now really needs to focus on execution. They need to get the ramp up of their EV fleet. The curve needs to steepen substantially. They need to fix some quality issues, and the market is now really expecting execution and less talk.
Arndt, it's always a pleasure. Greatly appreciated. Thank you very much indeed for your time today. Arndt Ellinghorst, Bernstein Global Automotive Research Head. Final numbers here in Europe. This is what they look like. In some ways, a fairly tepid session for European equities. A few standout stocks that are worth focusing on, but the FTSE 100 dipping into the close a little bit. The DAX and the CAC, though, just managing to hold on to positive territory. Volume wasn't great, but the stock 600, you can see the gains. We made 490 today. I appreciate we had a touch through that yesterday. We've held on to it today. The gains are just kind of inch by inch at the moment, centimetre by centimetre, but we continue to climb a little bit higher, Alex.
Yeah, it's a mixed picture. Definitely, though, here in the U.S., the Dow really trading kind of heavy, down by 0.5%. Coming up, we're going to talk about Alphabet. It was the latest to join the $2 trillion market cap. We're slightly below that level now, but nonetheless, they're part of that club. What's going to drive the next $1 trillion worth of growth? We're going to hear from Sundar Pichai, Alphabet CEO, coming up next. This is Bloomberg.
This is Bloomberg Markets, the European close. I'm Ritika Gupta, and you're looking at a live shot of the principal room. Coming up, Howard Marks, the Oaktree Capital co-chairman and co-founder. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg. Let's check in on the Bloomberg First Word News. I'm Ritika Gupta. In Germany, the number of coronavirus cases has risen to a record, and the number of deaths hit a 6-month high. Germany will delay some vaccine donations earmarked for low-income nations to make sure it has a sufficient supply of boosters for its own residents. In the UK, inflation climbed faster than expected to the highest level in a decade. That's putting pressure on the Bank of England to raise interest rates. Consumer prices rose 4.2% in October from a year ago. Higher costs for fuel, restaurants and hotels led the jump in prices. China's Vice President Wang Qishan is calling for the rest of the world to promote trade and investment liberalization. He also said China would contribute to an open world economy. Wang spoke at the Bloomberg New Economy Forum over in Singapore.
China cannot develop in isolation of the world, and nor can the world develop without China. China will not waver in its resolve to deepen reform and expand opening up.
Wang said that China's leader Xi Jinping and President Biden had reached important understandings in this week's virtual summit. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, thanks so much, Ritika. So Alphabet just recently hit that $2 trillion market cap. So where are you going to get that next $1 trillion worth of growth? Well, Bloomberg technology host Emily Chang sat down with Alphabet CEO Sundar Pichai for the Bloomberg New Economy Forum, and they talked about the aftermath of the Facebook controversies and whether the search giant will have a role in the metaverse.
We've been on as a company, we are trying to do more with less data. One of the biggest changes we made was making auto-delete the default setting for new users signing in, and now over 2 billion users have their data continuously being deleted. Look, we rely on trust for people. Every day when people come to Google, they place their trust in us in vulnerable moments. It may be a health issue on which they are trying to understand. There's no more important responsibility we have than doing right by that trust. When we provide Gmail to journalists and realize that their accounts may be under attack by an authoritarian government, that's what motivates us to make sure, be it privacy, be it security, be it trust, we are doing the right thing. Over time, regulation will have an important role to play here. I think privacy regulation is important. In areas like AI, regulation will be important. And so I think those will be part of the answers as well.
Facebook and Microsoft are all in on the metaverse. What do you think about the metaverse? What's Google's metaverse strategy?
It's always been obvious to me that computing over time will adapt to people and people adapting to computers. You won't always interact with computing in a black rectangle in front of you. So just like you speak to people, you see and interact, computers will become more immersive. They'll be there when you need it to be. So I've always been excited about the future of immersive computing, ambient computing, AR. And we are
Does that count as the metaverse? Is that what that is?
Metaverse is, I think it means different things to different people. The way I think about it is evolving computing in an immersive way with augmented reality. As part of that, there'll be many experiences, some of which will be immersive, interactive virtual worlds, which is the metaverse concept. And but I think this doesn't belong to any company, right? This is the evolution of internet and the web, the internet. All of it will continue to evolve.
Google just hit a $2 trillion market cap. Alphabet, I should say. Where is the next $1 trillion going to come from?
I've always felt, your market cap valuation is an effect of the value you provide. And I feel fortunate our mission is timeless. There is more need to organize information than ever before. I still feel search is our biggest moonshot as a company. People will want radically more conversational experiences. They will want what we call multimodal experiences. They may speak to search. They may look at something and ask what the information is. Being able to adapt to all that and evolve search will continue to be the biggest opportunity. We are so excited about, be it YouTube, cloud, our hardware products, Google Play. So we're building a diverse set of businesses, and underlying all of it is the investments we are making in AI. We've invested $100 billion in R&D in the past 5 years. And so applying AI in a deep way is probably where we will create the biggest opportunity ahead.
Emily Chang, sitting down with the Alphabet CEO, Sundar Pichai, for the Bloomberg New Economy Forum. There's plenty more conversations just like that coming towards you. We're going to be speaking to the former Treasury Secretary, Hank Paulson. What is his take on what we're seeing right now? HSBC CEO Noel Quinn and former British Prime Minister Tony Blair. Some great interviews coming up. Alphabet feels old school right now, Alex, compared with what we're seeing with Rivian and all those kinds of businesses. The amazing acceleration those businesses are generating. Google's had a great run, hasn't it?
Yeah, almost $2 trillion. I mean, we're off that level now. But I do think the question of the metaverse is quite interesting because I still don't really understand what that is. But also, how do you monetize that? Because that's going to be it, right? Like, that's the huge step change that we're going to wind up seeing for these big players.
And everybody wants in. I was reading an article about a fashion company the other day that thinks that the metaverse is going to be its next big profit driver. That's absolutely incredible. The opportunities that could open up here, advertising, so much is going to be driven by this. Trying to figure out exactly what's going to work and what's not going to work, that's going to be the challenge. But that seems to be a challenge in the real world as well.
You just got me. Now I can try on clothes in the metaverse. Like, you just got me.
Exactly.
Like, now I'm in. Yep. Now I'm 100% into the metaverse. Like, all in now, all in. Something else that I'm paying attention to, guys, I just want to highlight here is oil because we're sliding here, down by over 2%. WTI is now at 78. So on the one hand, you had that surprise drop in inventories. You had strong gasoline demand, strong distillate demand. You had some exports coming out. That's why you saw that draw. So that kind of weighed a little bit heavier on the price. But, Guy, you also have a lot of questions over D.C. Apparently, President Biden and President Xi talked about a strategic release of oil from reserves. Didn't yield anything. President Biden going after the FTC to look into if there's any gasoline manipulation in the market. I mean, I can't quite put my hands around all of this.
I think they're grasping at straws at the moment, trying to figure out exactly what they're going to do and how they're going to fix it, because inflation is a massive problem for the president. We joked at the beginning of the show, what would the president like for his birthday come Saturday? I suspect lower inflation would feature pretty high, but how does he actually make that happen? We were talking about this last week, weren't we? One way, pick up the phone, talk to the Crown Prince of Saudi Arabia. That hasn't happened yet. I suspect that might ease things a little bit. Maybe he's not willing to do that just yet.
No, I don't think so. But I also wonder if it would materially make a difference now that we're kind of rolling over a little bit. Plus, you have a modestly stronger dollar. We've had a nice little dollar run here. So that's going to put pressure on oil, too. And then most agencies are looking at a surplus in the beginning of next year. So I just wonder if we're overplaying it a little bit. Like, it's going to work itself out. Just give it like 6 weeks, but we'll see.
That's a long time in politics, 6 weeks.
I know. It's true.
When your approval ratings are doing what they're doing right now. Got to do something now. Must fix this now. That seems to be the mantra. Anyway, it is certainly something that the president is going to be thinking about. He's going to be spending a lot of money, which slightly kind of leans in on the idea that he's comfortable with inflation, but that inflation is certainly hurting him. Anyway, we'll talk much more about this, certainly as we build up to the president's birthday come Saturday. This is Bloomberg. Fifty-four minutes past the hour. Live from London, I'm Guy Johnson. Alex Steele is over in New York. This is the European close, that we've done the European close now. But we need to talk about, Alex, what is happening on your side of the pond. Financial stocks holding the market back. Amazon certainly in a credit card fight over here in the UK. Kriti Gupta has got all the details.
Well, Guy, thank you. Well, let's kick it off with those retailer earnings first. The upside stories, the positivity first before we get to the negatives. And really, it's TJ Maxx, it's Lowe's that's actually green on the screen right now. This idea that the consumer, American consumer, is still strong. They are still spending that money. But hey, Target, despite an also very strong quarter, really talking about those supply chain concerns, those labor shortages, and essentially the margin pressures. Let's get to that credit card story, though, because that's what is dragging the index lower. Of course, Visa, MasterCard, American Express, all down after Amazon says that it's just not going to accept Visa credit cards in the UK anymore, thanks to soaring fees in particular. I want to end here with EV makers because Rivian, Lucid, they actually crossed the market cap of GM and Ford, and now pulling back on some of those gains. Tesla, on the other hand, higher despite Elon Musk getting about 48% of those share sales for his 10% stake. Alex.
Really great. So really interesting market evolving. I love comparing the EVs for the traditional OEMs. All right, Kriti, thanks a lot. Bloomberg's Kriti Gupta joining us there. So that's kind of the lay of the land, the fundamentals, the retailers, margins, and then you have the speculative fervor, the stocks like what's happening with Rivian and Lucid, etc. So that's now. Here's what's coming up. Over the next 24 hours, the Bloomberg New Economy Forum will be continuing in Singapore. Huge lineup of guests. Don't miss that. Lots of fun earnings as well. You got NVIDIA. That's going to be interesting, particularly with its takeover of ARM over in the UK. Cisco Systems also as well. And I mentioned earlier, Guy, Fed speakers, Mary Daly, Raphael Bostic, and Charlie Evans. All those coming up in the next 24 hours.
No Powell, no Brainard. I wonder why. Yeah. We wait at the president's discretion on this one. Tomorrow, Turkey, South Africa rate decisions. The Turkish lira has been punished today. President Erdogan seems to believe that interest rates need to go further down. We'll see whether that happens tomorrow. Could be a very painful process for the currency. Eurozone new car registrations. Keep an eye on that. That'll give you a pretty good sense of where we are with the consumer trying to get hold of a car, though pretty tricky right now. Macy's, Coles. We get Applied Materials as well tomorrow, which is going to be interesting. Vincent Reinhardt is going to be joining David Weston next. This is Bloomberg.